The stock market held in pretty well today as we saw the S&P 500 and the NASDAQ composite both hit all-time highs. Russell 2000 was up just a skosh, and the Dow Jones actually finished exactly flat for the very first time since 2014. On the upside, we saw a lot of healthcare stocks leading the way. On the downside, it was those oil and gas names. Do you want to look at all of that, see how it affects our posture? And then in our trade application example, I want to focus on a traditionally boring financial stock that just broke out here within the last couple of days and may have some further upside potential. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 12th, 2019. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee, and thank you to everybody who clicks like and retweet for these Market Outlook related posts. Lastly, we have a presence on Facebook as well, where you can check us out at the group embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. But before we get started here tonight, just wanted to let you know of a slight programming change that will be coming your way. David's got some things going on here going forward and needed me to switch days with him. And so traditionally in the past, I had done the Market Outlook video on Tuesdays and Thursdays. I will now be doing them on Tuesdays and Wednesdays, so kind of back to back there in the middle of the week. And then David will do Monday, Thursday, and Friday. So just be aware of that. I'm sure he'll mention that to you as well. Anyway, as we look at 4B here, this is the 4 grid that'll allow us to see the 4 major U.S. equity indices. And it allows us to see if there's any sort of differences with one another. And for the most part, that's not the case. We have bullish markets across the board. We've had them for a long time. We probably sound like a broken record because we've had a bullish posture for several weeks now. At some point, we would anticipate that that would, give way to maybe a little bit of bearishness, but not enough bearishness to actually change the trend. This has been a pretty significant run. In fact, I think the near-term line has been above 50 for like 24 days now on the S&P 500. Normally, it does not last that long. A near-term run does not. And so we would expect some sort of a pullback, but that would be viewed more as a buying the dips opportunity more than anything else if that were to unfold. As of right now, that's not happening. We're not getting the pullback. We're pushing to new highs, and again, it's not exaggerated to the upside. We were only up 0.16% on the S&P 500 today. It was enough to tag a new all-time high, especially on an intraday basis there. And then we also had not only an intraday high, but an all-time closing high on the NASDAQ as well, and it was up 0.26%. So not dramatic gains to the upside, but nonetheless, obviously the path of least resistance continues to be to the upside. I mentioned that the Dow had kind of a peculiar close. As you can see, it was 0.00. You don't see that a whole lot. It was a nice little gray-looking doji, as you can see right there on that particular chart. So perhaps some indecision amongst market participants. And then the Russell 2000 did close higher, but just barely. You'll see it was only up 0.02%. Again, bullish postures across the board. That's what that green background color is telling us on those charts, telling us that the green intermediate line on the market forecast is in a bullish position. In terms of the moving averages, you can see that all moving averages are also green right now, telling us that price is above a rising moving average. Both of those things we would consider to be bullish here going forward. One little tiny element of bearishness that I could point out is on the S&P 500, you'll see a little bit of a bearish near-term divergence taking place here. You have peak number 1 there on the blue near-term line, and peak number 2 right there, which is clearly lower than peak number 1. Yet with those candles, it was associated with that candle and with that candle. So higher highs on the price candles, slightly lower highs there on the near-term line. So, again, we're more than overdue for a little bit of a pullback. Perhaps that gets started here within the next couple of days as a result of that bearish near-term divergence that we're seeing right there. All right, let's go ahead and take a look at our 3 green arrows chart now. This will be chart 4D for those of you following along at home. Not a whole lot to report here other than we did have one red arrow creep in here on the Russell 2000. All the rest of the charts continue to have 3 green arrows, but the Russell 2000 did get a red arrow that just entered here today on the MACD histogram. And remember, that tries to measure momentum. And so it's not a surprise as we look at this chart where momentum really isn't there. This is a chart that is largely traded exactly flat here for the last, let's call it 6 or 7 sessions. And so momentum is not going for the bulls right now. It's not really going for the bears either. It's just kind of taking a little bit of a breather at this time. But because there's a lack of momentum to the upside, we no longer have 3 green arrows on that small cap Russell 2000. The rest of the indices do still have that particular signal, and remember, that is a signal that trend traders tend to use, and when they use it on big indices like this, it's just a way to gauge the general market's ability to kind of take in trend trades on individual stocks. Like in my Monday top-down trend trading class, we pick individual stocks there for that particular portfolio. But it can also be useful to look at 3 green arrows on the broad markets to try to get a sense of what type of market environment are we in prior to making our individual stock selections. Let's go ahead and now take a look at our longer-term view. This will be our 1040 crossover method. And as a reminder, the biggest change we've had here is with the Russell 2000. A couple of weeks ago, we did get a bullish crossover. You can see the background color went from pink to green, telling us that we indeed have a golden cross, I guess you could call it there. Now, remember, for those of you that are newer, this is a 3-year chart that we're looking at here. Each one of these candles is 1 week in length. And the different moving averages that you see, the orange line is the 10-week moving average in this case, and the blue line is the 40-week moving average. And so when we saw that crossover take place there with the background going from pink to green, it basically means that the 10-week moving average went above the 40-week moving average for the first time in a couple of months there. Now remember, Russell 2000 was the one that's been chopping sideways for much of 2019, whereas we've got a much more obvious trend in place with these other large cap indices here where the trend is to the upside right now. So I guess the good news is we continue to have bullish postures on the 1040 weekly crossover method at this time as well. All right, let's go ahead and now take a look at some of our 12 grid analysis, starting with chart 5A. This is our asset classes 12 grid. And as this pulls up here, a reminder of the background colors of this particular chart setup will identify whether we have a bullish or bearish intermediate term posture, and that's using the market forecast technical indicators. Not David and I's opinions. It is what it is according to that indicator. Now, of course, that indicator can be right or wrong, just like any technical indicator can, but at least it does provide a consistent way for us to go forward with our analysis on these videos. And so, as you can see, on this first set of 12 grids, we have quite the mix between green and pinks out there. The 3 that you see up at the top are our stock market related charts. That's the U.S. stock market in the upper left. It's the foreign developed stocks right next to it, and then it's the foreign emerging stocks right next to it. In all 3 of those, we have that deep shade of green right there. Not only that, but we have a green moving average on all 3 of those, telling us that price is above a rising moving average. So strongly bullish postures according to the market forecast intermediate line, and path of least resistance continues to be to the upside. Another chart that's probably worth pointing out from its trending ability right now is U.S. Treasury yields. However, it was a pretty ugly day for them. We don't really look at U.S. Treasury yields on a percentage move up and down on a day, but just to give you a sense, you can see that that candle is a little bit more aggressive to the downside. It's not the biggest one on the chart by any means, but I think it's where it's positioned that's important more than anything. In other words, we had this really nice bounce higher on interest rates for the last, let's call it, week and a half, and today was probably the most significant pullback in interest rates that we've seen during that time period. So it kind of gives us the impression that interest rates want to roll over here. Now remember, when I say roll over, I don't mean that it's going to go from being in an uptrend to being in a downtrend. I merely mean that we've had quite an impressive bounce off the moving average there. We may need to give back a little bit before continuing higher with a new set of higher highs and higher lows. So keep that in the back of your mind. We actually talked about REITs today in my dividend growth investing class. here at Market Scholars, for those of you that are Premium and Plus members. That recording, by the way, is not posted quite yet. Usually WebEx does a lot better job getting that to me earlier in the day, and David and I have to wait for WebEx to send us the files back before we can post them. So if you've been looking for that earlier today, my apologies, I haven't received the file yet. But as soon as I get it, I'll get it posted to our calendar. But anyway, we finally had an opportunity to talk about REITs today for the very first time in our dividend growth investing class since we started this current iteration back in July. And we had purposefully stayed away from REITs up until this point because we kind of viewed REITs earlier in the year as being wildly overvalued. Now, I would still say they are largely overvalued, but at least there are some one-off values being created here or there where maybe dipping the toe in the water could make some sense with REITs if you've been waiting for a pullback like we have. And today is an important day for VNQ here. You'll notice VNQ actually had an oversold cluster signal. Now remember, that doesn't guarantee anything. It just gives you a general idea as to where the selling had gotten a little bit too extreme, and we might be due for a little bit of a short-term bounce back reversion to the mean type of a move. So, if you've been waiting for an excuse to start, sifting through some of the rubble, so to speak, of those REITs that have been getting hit here recently, maybe this is one reason to perhaps dip your toe in the water if you've been looking for that opportunity. Other charts that are out there of note, you do see U.S. Treasuries, long-term U.S. Treasuries, still in a downtrend right here with a bearish posture. We did have a oversold cluster signal a couple of days ago, and we have had two upward sessions since then, but they just haven't really been extreme moves up. They've, it was up about 0.5% here today. But there's a long ways to go before you would even be touching that downtrending moving average. So I wouldn't be surprised if we get a little bit of a bounce out of long-term treasuries here, a little bit of a bounce out of the REITs, perhaps a little bit of a bounce out of the preferred stocks that also got that oversold cluster signal yesterday. We're probably due for some bounces there in some of those risk-off types of areas that have kind of been thrown away here in the last couple of weeks. Let's go ahead and now take a look at our next chart setup, and this one will be Chart 5C, and this is our U.S. sectors 12 grid. As you can see here, it's a little bit of a mixed bag. I talked about the REITs already and some of their oversold conditions, but of course, just like the REITs, you're going to find that utilities kind of move in unison with them. And if you look at these two charts in the lower right-hand corner, you'll see that they both kind of really dropped off here in the last couple of weeks. So it shouldn't be a surprise to you then knowing that utilities have oversold cluster signals popping up down below here as well. So what I mentioned a moment ago, that we're probably overdue for a bounce in bonds and in REITs and in preferred stocks, I should have also mentioned utilities. We're probably due for a little bit of a bounce back in utilities as well. Doesn't mean that it has to lead to a renewed uptrend, just means that we probably have stretched the rubber band a little bit too far away from that 30-day moving average right there, and we might need to snap back a little bit closer to it. In terms of the more bullish sector charts on the board, you can see we have a number of them. Financials look pretty strong. Communications doesn't look half bad. Technology looks pretty good. Now remember, that is being driven in large part by Apple and Microsoft, because XLK is a market cap weighted product. Remember, it is not equal weighted. In fact, I was having a conversation with, I think it was Dan Russo today on Twitter regarding XLY. And he was mentioning how XLY wasn't keeping up with the Joneses. And a few of us were mentioning that part of the reason behind that is Amazon is a full 1/3 of XLY. XLY doesn't look all that great here, as you can see. It's kind of been tracking sideways on a market cap weighted basis because Amazon represents 33% of the entire ETF. But if you were to eliminate the overweighting of Amazon and instead go to, was it RCD? Now I'm curious. I forgot it off the top of my head. I bet if I could go over here to Twitter, I could find it pretty quick. It's not a ticker symbol I look at all that much, to be honest with you, but I happen to see it today. RCD is the ticker symbol. So let me pop that up here. RCD. There we go. And you can see that looks a lot better, right? The chart is up there in the upper half of the range. This is an equal weighted version of XLY. And so XLY doesn't look so great because it's including the negative impact from Amazon not doing so well recently. But RCD, which makes Amazon the exact same weight as all the small discretionary stocks within the index, this looks a lot better here. So I wouldn't necessarily just throw out all discretionary stocks because you're looking at XLY and thinking it looks terrible. On the whole, from a market breadth perspective, discretionary stocks don't look all that bad. Let's have a quick little chat real quick about the sector selector as well. While it's on my mind, remember that I produce this sector selector traditionally on Friday evenings, and this is an equal weighted approach that I'm using here. So it is not a market cap weighted approach. So keep that in the back of your mind as you're looking at the rankings. But we did have quite the shakeup from a sector selector perspective. We have a brand new number one here with the industrials. Now they were number one back here on September 13th very briefly as well, but they're back in the top slot there, and those industrials have just been crushing it from a new highs perspective. I almost ran out of room on my lower half of my sector selector graphic with all of the individual ticker symbols of the industrial stocks hitting new highs. Financials look really good as well. They were able to manage to get all the way up to number two. And then a surprise number three, materials, which is an area we haven't really talked a lot about, but there are some areas within the materials that are starting to perk up there on an equal weight basis as well. So those were the areas that we focused on yesterday in my top-down trend trading class here at Market Scholars. Keep that in the back of your mind with financials as well, because that will kind of impact our trade application example that I'm going to have in this video a little bit later today. Also, while we're over here on the internet, a quick thank you to those of you that went out of your way to click like. You guys did a great job for me on last Thursday when I did the video. Thank you so much for that. 124 of you did that. Once we get over 100, I'm smiling ear to ear. So keep it up. And we won't have any complaints from me. So if you could do that every single day, get in the habit, routine of letting David and I know that, hey, you like these videos, you want us to continue doing them as often as possible. Your way to tell us that is by clicking like there on Twitter, and we make it nice and easy for you to do while you're watching this video on our website if you wanted to, by just clicking this graphic here. Otherwise, you can always just go to Twitter, look up David and I individually, and you'll find the most recent Market Outlook video that we've done posted to the top of our timeline. All right, let's go ahead and get back on track with some of these 12 grid charts here. Let's go ahead and take a gander at what's going on across the globe with the global stocks primary 12 grid now. And as you can see here, it looks like it's all systems go for the most part. The only weak link here is Brazil. And even that chart doesn't look terrible to me, quite frankly. I wouldn't mind putting on a bullish trade on Brazil as it stands right here. We have had a pullback, and it has produced a weekly bearish posture. Note that background color is a light pink. It's not a dark pink. So that tells us that it's a weekly bearish posture. And you can see right here the intermediate reading is at 62 and falling. So remember, since that number is above 50, we would call it just simply weakly bearish, not strongly bearish. But I actually don't mind where it's kind of hanging out right now. You'll notice we had a breakout above this prior resistance area from let's see, it was September 12th, and we broke out above there on October 22nd. We continued to charge higher. We had a little bit of a breakout retest, and we're retesting it right now. And I like the shape of this candle here today on EWZ as well. Kind of gives us the impression that, the bulls were in there to kind of, draw their line in the sand to a degree, because we had that long lower shadow right there. It's not a perfect hammer, but it gives you the impression of a hammer, which oftentimes you're hoping will show up at a support level, which I would consider that to be where we're at right now. Remember, old resistance can become new support. So I'll be curious to see if we get a bounce out of Brazil, but for those of you that have kind of felt a little bit nervous, buying breakout types of trades and you're looking for pullbacks, perhaps Brazil is interesting. I would also say China looks kind of interesting from that perspective, right? China's had that nice etched out higher highs and higher lows. We've had a pullback here over the last 4 days. In this case, we haven't pulled back as much as we saw there with Brazil, because we're still above that rising moving average, but that philosophy still holds true. In fact, here you could almost say you had a double top right there on FXI. We had that breakout retest. Now that we're retesting it, we're hoping that this support level holds here. Now, this candle today does not give us the same impression as we saw there with Brazil. It doesn't quite look like a hammer. Nonetheless, I want to keep that one on my radar screen there for those of you that like the buy the dips mentality, as opposed to those of you that might be interested more in kind of the breakout types of trades. We've been talking a lot about Japan, and that one just continues to impress. It was up yet again here today. We didn't hit a new multi-month high. We're still a couple of days away from that, but it was a very solid kind of a mini almost bull flag that you're putting in there over the last couple of weeks. So Japan seems to be on a one-way march higher right now and has been one of the strongest markets across the entire globe in the last few months. Let's go ahead and take a look at our secondary 12 grid from a global perspective now. And in this particular case, these are going to be some of the smaller economies out there, and we don't have quite as strong a chart here, but we do have some decent setups nonetheless. Let's start with the bad side of the equation. You can see 3 pink charts on the board. We've got Spain that now has a light pink color. We also have Indonesia with a light pink color, telling us that we have a weekly bearish posture on those two. And you can see both of them are sitting right at a potential support area with their 30-day moving averages. Argentina is quite a bit of a different story. There you can see the background color of the chart is dark pink. That is strongly bearish territory. You can see the intermediate line is well entrenched into the lower reversal zone. It's at 12 right now. So this thing has been a house of pain for a long time, and anybody who's tried to get bullish on it really hasn't found any success with that. They've largely just been tracking sideways. At some point, if you get a little bit of mojo there, perhaps it'd be interesting from a speculative perspective, but from for what it's worth, my own thoughts are, why would you mess around with Argentina right now when we've got so many other charts that look quite a bit better out there that are already showing progress from a technical perspective. You'll see a lot of the same types of charts that I mentioned on the primary ones, where we've had a little bit of a pullback here more recently. Mexico kind of represents that. We pulled back for three out of the last 4 days there. We're now at that moving average. I mentioned Spain is doing that already. We've had a little bit of a pullback there in Taiwan. And remember, Taiwan has been a little bit more like Japan in my analysis for the last couple of months, in that it seemed like it was on a one-way trip higher. Today it was a little bit lower, and it remains about 3 or 4 days away from its previous multi-month high there. But obviously that uptrend remains intact. This could just be resetting the deck, so to speak, and ready to take off for another move higher there. So keep your eye on Taiwan. If you've been waiting for a little bit of a pullback, perhaps this is an opportunity for you. One chart that is firming up nicely, that is kind of relevant from a news perspective right now, is Saudi Arabia. I know we don't talk about that one quite often compared to a lot of the other major economies out there, but Saudi Arabia is ticker symbol KSA, and most of you are aware that Saudi Aramco, the big oil company over there, it wants to go public. And if it does, it will basically become the world's largest publicly traded company by a landslide. It won't even be close. And so they're hoping that they can launch that in November. Right now, I would say things are firming up. Prior to this move that we've had in the last week or so, I was a little bit more cautionary around it, because it seemed like we continue to be in lower highs and lower lows with an entrenched downtrend. But at this point, I'm starting to wonder, whether there's the conspiracy theories out there or not of people trying to hold up the Saudi Arabia market so that they could successfully launch the Saudi Aramco IPO. No matter what your background thoughts are regarding that situation, this is kind of shaping up like an interesting head and shoulders pattern that we have right here. Now, this would be an inverted head and shoulders pattern. So remember, the expectation would be a breakout to the upside, right? Because that's a reversal pattern. But you can kind of see that left shoulder right there. There's your head, and there's your right shoulder. So I'm gonna be curious to see how things shake out there with Saudi Arabia. But perhaps for those of you that, if you have a suspicion that the Saudi Aramco IPO is going to be wildly successful, one way to try to play that as an American-based investor would be to purchase KSA, which will undoubtedly have an allocation towards that individual security once it is available on their markets over there. I've heard that there's going to be a number of restrictions where U.S.-based investors, at least individual retail investors, wouldn't be able to own Saudi Aramco outright, but this would be kind of a sneaky way to have some exposure to it, along with a lot of other stocks in Saudi Arabia. But nonetheless, we are seeing some signs of life there in Saudi Arabia, potential reversal on our hands, potential inverted head and shoulders. So let's keep our eye on that story as well. All right, that brings us to our trade application example for the day. I'm going to bring up chart, let's see, 3A would be fine for this. And one stock that I noticed that it's kind of breaking out here in the last couple of days is Allstate, of course, the big insurance company here in the United States. And for the most part, over the last 3 months or so, Allstate had been just tracking sideways. You can see that basically since the middle of September until just a couple of days ago, this thing, it was basically caught in a sideways range somewhere between, let's call it 109 and, I don't know, 104. And for the most part, it was trading within that range that entire time period there for, a couple of months. Well, after having that rest and the ability to catch its breath as a stock, it is now starting to give us some positive momentum to the upside. It started by having a break above the moving average right here. But since then, it's gone up an additional 3 days in a row. In fact, that move has been strong enough to the upside where it's actually curled the 30-day moving average higher. So all of a sudden, we went from a stock that was meandering for 2 straight months to a stock that is now breaking out above its prior horizontal resistance area and making such an aggressive move that it's turning that moving average back higher as well. And as I mentioned before when we were doing our sector analysis, the financial stocks on the sector selector tool are the number 2 sector out there. So we already know that there's some embedded strength within that area, regardless of this individual stock story here. So, if you believe in a rising tide lifts all boats and you think that the financial stocks will continue to show improvement, then perhaps Allstate will also benefit from that. And the other nice thing is they've already reported their earnings, so we don't have any potential hiccups there. What I thought we would do today is just keep it nice and simple here. They do have options, but they're not the most liquid options. They're not Apple, for example. So I thought we would just do a stock-based trade in today's example. It will be kind of viewed as more of a swing trade type of an idea. And what I'm kind of gunning for is about 114 up here on this particular trade. As I mentioned before, we kind of had this range from 109 down here to 104. That's a $5 range that we're dealing with there. And so if you were to add that $5 back onto the top of where you saw that horizontal resistance before, so $5 plus 109 would lead us to a 114 price target. So that's kind of what I've got in the back of my mind there. This stock is currently trading at 110, and if I wanted to maintain a 1-for-1 risk to reward relationship like I typically do, it basically means that if I'm shooting for a $4 per share upside potential, then I'm going to set my stop loss about $4 lower than where we're trading right now as well. So that would bring us to a stop loss around 106 if we're just kind of using rough math right there. So let's go ahead and place that trade just for paper money educational purposes. I'm going to right click on the chart. I'm going to come down here to buy custom with OCO bracket. That will then load up our trade down below. I'll click those that paperclip icon there on Thinkorswim to lock all those together. For our educational purposes here, I'm just going to do the default 100 shares. Obviously, you'd want to change that if you so desired according to your own position sizing. I'll go ahead and leave this in here as $110.20 is where I'm willing to buy it, which is about 7 cents higher than where it closed here today, just in case it needs a little bit of wiggle room first thing in the morning. I will then, on the second line right here, put in $114 as my upside price target. I will change that to a good till cancel order. On the line directly below that, I will also change that to a good till cancel order. That will represent the stop. And then on that final line right there, I'm going to put our stop at, let's call it 106. So that way we have approximately $4 of upside potential. We have about $4 of downside risk. And as long as the upward momentum of this chart continues, we should have a decent chance of seeing some success, assuming that the stock market and the financial sector continue to be bullish in the coming weeks and months. So with that, let's go ahead and place the trade by clicking confirm and send, and then sending that off. All right, well, thank you for joining me here yet again. Remember, the markets remain bullish. A couple of our key indices hit all-time highs here today. Wouldn't be surprised if we need some sort of a breather one of these days, but we haven't received it quite yet. So we'll be on the alert for that. But in the meantime, path of least resistance continues to be the upside for stocks here, especially in the United States as we go towards the holiday shopping season. I'll be back with you here tomorrow to review this yet again. And until then, I want to wish you all the best of success with your trades and your investments. Goodbye for now.